Hello, everyone. Welcome to the stream. Hello, everyone. Welcome to the stream. I'll be with you in 5 minutes. We're just getting everything set up. So settle in, make yourself at home. I want to check that everything is working. And I normally start 5 minutes before the stream early so that everything is working fine. So welcome to everyone. I can't see who's in here. I can see Mr. Mian is in here. Well, welcome, Mr. Mian. And it's great to have you. Nice purple hand. Nice to see you. Emily Trading, another purple hand. And welcome to myself. No purple hand on this occasion. All right, folks, we're waiting for 5 minutes before we start. So let me get through a few formalities here. If you've got any questions, please post them up now. Be a good chance for you to put them up so that we can get to them. Hi, Martin. Nice to see you, mate. And if I go through my sort of monologue, I'll double back on some of the things that you are asking me about later on. So make sure you put your questions up. The earlier, the better, because those who put up their questions early will get them answered first. Emil, nice to see you. It's lovely to see so many familiar faces. So just going through the housekeeping, as they call it on YouTube, please make sure to like and subscribe. That's the most important thing from my perspective. And perhaps from yours, because if you do that, you'll make sure to get notifications of all the videos that come up, and you'll be part of the crew, part of our team, part of our community. So like and subscribe. We'd really appreciate that, and it helps us to improve the stream and grow as a channel. And we can't do it without you, and that's a fact. So yeah, so click on the like and subscribe. Secondly, I'm going to try and give away a few memberships today, but I think I may have exceeded the amount that I can give away. I'm going to try right now whilst we're at the beginning of the stream. And it seems like I've sent a few too many already, so not enough left there. Anyway, all right. We can do that from the 1st of next month, apparently. New memberships, free memberships here. Good day, Nabil. It's nice to see you too. And Mr. Man, Mr. A Mon. Good to see you. So folks, just to remind you, we start in 4 minutes. Please make sure you put your questions up, like and subscribe when you're coming into the room, and we'll be starting very, very shortly. Hello, you're 11. I saw you during the week, last week, on the other stream. Nice to see you. All right, let's get the charts up so long and get some action going, just a little bit, half the charts. I'm just going to get a few things set up and my notes. Hang out, make a coffee. We've got 3 minutes before we start. Good day, Davis. Nice to see you. And you're 11, as I said. Welcome to the chat, everyone, and welcome to the stream. 18 folks here already. We're starting in a couple of minutes, and I'm hoping that we'll fill up a little bit today. There's also a QR code on your screen at the bottom right-hand side, as you can see. I don't know if I don't think I can point it out to you, but it's at the bottom right-hand side of your screen. Click on there. There's a few free giveaways for you there. And if you click on there, you'll be taken to a website where you can download those. And the other thing I want to let you know, just in case you don't know, in case your head's been buried under the sand, Paul Pico has joined our team, and he's our crypto expert. And he's doing regular videos and updates in our private group. So if you're a crypto trader and you'd like to watch some of Paul's analyses, make sure to subscribe to the channel, because you'll get most of that for free here on YouTube. But if you'd like to follow our trades, we have a private group over on Slack, and you can join up there too. It's not expensive, and you can click on the links below to get access to that. So come and join us in our private Slack group and come and trade with us. We trade 5 days a week. I post every single trade I take up in the private group, including the entry, the exit, any adjustments, covering all the instruments that we trade, including natural gas, oil, metals, stocks, crypto, currencies, and a lot of softs and grains, including cocoa, sugar, stuff like that, orange juice even. So come and join us in the private group. It's not expensive, and we are running a Valentine's Day, a Halloween, not even Halloween, Black Friday, Cyber Monday special. So also a good reason to subscribe and make sure that you get your name on the list for those giveaways. So we'll be letting you know more about that. All right, folks, we are going to talk about MSTR, that's for sure, Emil. We definitely need to talk about that. And we're going to be talking about NATGAS, of course. And there are a couple of other questions that came in during the week that I'd like to attend to as we get time. So once again, folks, welcome to the show. We start in 1 minute's time. please humor me with your like and subscribe. It really helps the channel, and I encourage you to do so, not just for us to help grow the channel so we can provide better services for you, but also so that you don't miss out on the videos and the updates that you might need for your own trading. So there we go. Looking forward to the natural gas analysis. We will get to that for sure. Greetings from Ole from Germany. Nice to see you, Ole, always. And MD, can we check Bitcoin and MSTR? Sure. We're going to be focusing a little bit on some of those today. And Emily Trading, nice to see you. Welcome to Emily. And thanks for you joining us, Emily. I appreciate that. JB Auto, nice to see you. All right. Thanks for joining us, JB. And let's get straight into it. Now, folks, as I said earlier, before I start, 1 minute to talk about this. If you've got any questions, please put them up. I'm going to go through a bit of a monologue, and then we'll get back to and circle back to your questions when I'm done. I don't know how long today is going to be. We've had quite long live streams on a Sunday in the past, but I'm feeling a little tired today. We'll probably run for an hour anyway, but I'll try and sort of shorten it a little bit. I know you've all got things to do on a Sunday night, and you just want the basics. So let me give you the basics, and we can fill in later on if you've got further questions to that. So I'll start with currencies. Now, the dollar index has dropped off a lot, as you can see, and it turned around exactly at the place that I thought it would do, to the penny almost. And there's the 200-day moving average on the Dixie. We broke up a little bit through the Dixie Moab zone, this block here, the orange block, which you'll know very well about if you've been following my videos. But for those of you who haven't, this is the main breakdown, long-term breakdown level of the dollar. I've called it Moab. It doesn't mean mother of all bombs, mother of all breaks. And we've got a few of them on different charts, including crude oil and a couple of other names as well. But we've broken down through here, and I think this is a fairly significant break, heralding a slightly weaker era for the dollar. It's not just because it technically looks like it, because the dollar is also under pressure from various other, for various fundamental reasons. So I think we may have a chance of holding under here, and perhaps a little bit of a dollar sell-off as we approach the end of the year. And as we see, and we're starting to see already, some of the asset classes beginning to rally. We'd need the dollar just to weaken off a little bit for that. Not necessarily. Sometimes we see an everything rally, including the dollar, or an everything drop, including the dollar. On this occasion, though, I think the dollar is moving down quite nicely. I don't know how far it'll get. We're below the 200 now, and we're at the bottom of Dixie Moab. Now, this is a support level 2, the bottom of this orange block. And you can see we did try and bounce out of that previous support level. So it's a pretty key level. And we've also got the 20-period moving average below us here and the other moving averages. I still think, however, that we could get something similar to a move down towards the bottom of this megaphone and then a bounce out of there back to more or less roughly where we are. Dixie Moab, around about 100, is parity for the dollar. Now, I'm going to keep an eye on the chat while I'm talking. It's not because I'm just distracted by other stuff. It's also, someone coming through the door or the dog or a shiny can of Red Bull over there. It's because I'm looking at the chat to try and figure out what questions are coming up so I can focus on them as we go along. Edward, I'll get to that as well. Natty, a lot of questions about Natty. We'll come to that in due course. We've got plenty of time, folks. The natural gas market only opens up in a few hours' time, so we don't have to rush into it. So if the dollar does move down, and it looks like it is, we've got to start. Remember, we're above all the moving averages and above that swing high over there and above the bottom of Dixie Moab so far. Doesn't mean it's going to carry on moving down from here, but we've got to start. And so as the dollar moves down, we should see some of the other currency pairs move up, like the euro and the pound. And they have moved up quite nicely along with the dollar. But I don't have any trades on those. And I've chosen a different major, or sort of some would call it a major, the Australian dollar, and some would call it a B-class currency. In terms of the majors, euro, pound, Japanese yen, the majors, and maybe the CAD and the Aussie. But here's the Aussie bouncing off its trend line and the 200-day moving average. This is the one I am long on. And, it's been the slowest one, unfortunately. The pound and the euro have moved up a couple hundred pips, well, 100 pips at least. And the Aussie has moved up just a little bit, but not before moving down to the bottom of this pattern. I think this is a good pattern for the Aussie. It's a rising trend line. We had the Liberation Day breakdown. The Australian dollar and the Canadian dollar and the South African rand all broke down at the same time. That was the tariff sell-off. These are countries that supply a lot of commodities to the US and other parts of the world. And of course, it affected the Australian dollar when the commodities dropped off. We regained strength thereafter pretty convincingly, really. We're holding above that short-term trend line and the 200-day moving average here, the purple line. And we're within a larger, broader falling wedge pattern with 3 massive spike lows below the wedge, maybe 4 if you look back there. And every time we get down below that pattern, we reject and move up sharply. And I think we're now moving up towards the top of this falling wedge. So we're holding support here, 200-day moving average, and this channel support line. A little tweezer bottom a few days ago. That was at the beginning of October, well, mid-October. Tweezer bottom looks really good, and we have not defeated that tweezer bottom. So that's the new line in the sand. One might actually want to put a horizontal line across there. I hope that's the line and not the ray. That is the line. And we're going to put it across there at that tweezer bottom. I'm going to make a little different color. Let's make it purple. And just remember that purple in this case means tweezer. So if we can hold there, and also notice that the 200-day moving average, I think this is a good chance of bouncing out of it. It's one of my favorite plays on currencies. Whoops. That was to go to the broker's chart. And then the other currency play that I've got on is short the dollar yen. And it really is a trade which is very long term in the making and probably not a good trade. We can all be honest with each other sometimes. I've been short on this many times over the last couple of years. I've been trading it for over 30 years and never so badly. So most of the time I've been able to read this pair over the last couple of decades until the last couple of years when we've moved into this hyper inflation or depreciation rather of the Japanese yen against the US dollar and other currencies too. I think this has probably come to an end more or less now. I don't know how much further we can go. I know we've got a dovish prime minister being installed in Japan. We may look to provide fiscal stimulus through cutting rates or keeping them low, printing money, making conditions easier. And that's likely to perhaps just push the yen further down and inflation up in Japan. It's a big problem. They don't know quite what to do about it, but we'll see how we go. We have moved down quite nicely. Notice that we're at the top of the rising, what looks like to me a bull flag, and the top, this squiggly red line, and the blue surrounds around it is the top 200 period Bollinger Band. There's the lower 200. And you can see we've got a pincer movement occurring, squeezing these Bollinger Bands in. And I think I should actually make this chart a bit bigger. Why did no one tell me? It's too small. Let's make it bigger. Should we go with that view or with this view? I think we'll go with that view. All right, so let's go back to the chart. Sorry about that. Luckily, we didn't get too far. Now, we've moved down quite nicely. I think we can follow something like this. I'm allowing for this currency to mess around a lot more. I don't have a lot of hope, but actually, I think maybe now is the right time to be selling this. And if the dollar does tick down, the Dixie, and the Jixi ticks up, the Japanese yen index ticks up, this will move down quite rapidly. So let's have a look at the Jixi. Is the Jixi moving up or is it moving down? And this is the Japanese yen measured against a basket of other currencies. You can see very, very long-term downtrend. Not always, though, going back in time, quite a long time now. We can't go back far enough here on this chart. But, at one point it was fairly stable up at these higher levels. So can we get the Jixi bouncing out of its 78.6% Fibonacci here and moving higher? The lower 200 period Bollinger Bands there too. And can we get this moving up? I thought we'd move up from the green arrow. And that's where I got my first short position on the dollar yen. We've now got another short position on the dollar yen, and I still think this will move up. We're bouncing out of the 786 and the lower 200 period Bollinger Band. Let's squeeze in. Now, basically, this is a counter trend trade because it's moving down, and I'm hoping that it will change direction and move up. It has not done so, but it's trying. We made a fractionally new low below the Bollinger Band. We're still below the 20 period moving average, the green line. We did close above it on Thursday, actually, only fractionally. And maybe you might say that's just on the line. And then Friday, we drop back down again. I don't know how we're going to open up tonight. In a few hours' time, this market will get going. In 3 hours' time, and we'll find out what's going to happen with the currencies. There's a good chance this could gap up over this weekend. Sometimes currencies do that. And we could see the dollar yen moving down at the same time. So we'll find out fairly soon. Now, let's go across the stocks. Actually, currencies aren't that exciting at the moment, but some other things are. And if you're in my private group and if you were watching videos last week, from ArcisFX and even my shows at Ola Prime TV, where I, every single morning last week, I did a full hour on Ola Prime TV, 2 of them solo, Thursday and Friday. And I did exactly what I'm doing here. So if you attended those, you'll know what I was looking at on the NASDAQ and the S&P. And, we bought the dip. I said I was going to, and I did. And I said, watch out for the 50-day moving average here on the NASDAQ. It dipped down to there. I thought we could take a little bit more time to get there. There's my blob, but we got there prematurely. If I move my blob along to the left-hand side, you can see we basically blobbed it to the T, as they say. We bounced out of there. I'm going to actually get rid of it. I'll leave the blob there. Why not? We bounced out of there very, very sharply. Let's have a look at the shorter term charts. Let's go to the 15, actually. On the day chart, this is Friday. Massive sell-off, V-shaped recovery on the 15, and no stop. We had a shaven head close to the day, basically, even though the daily candle has a higher high. Not, we didn't quite get to the higher day, but on the 15-minute chart, we closed, the very last candle closed as a shaven head. So incredibly bullish on the NASDAQ, and we're long from the dip right down there at the 50-day. We're also long from these two levels, but this is my biggest tranche. Those other higher ones will be absorbed really quickly. In fact, probably already absorbed by the profit from the third position. And then on the S&P, same sort of thing. Dipped down to the 50-day moving average. We did get a little bit lower. We did on the NASDAQ too. Not a lot though. And remember, we had to close the gaps here. There's the gap on the S&P. There's the 50. We dipped down to it, broke back up. Let's have a look at this one on the 15-minute chart. Another V-shaped recovery with a shaven head 15-minute candle. It's a shaven head 1 hour candle. It's a shaven head 4 hour candle. Incredibly bullish on the S&P. Look at that 4 hour chart. It looks amazing. So there we are, long from, we didn't quite get the bottom, but very, very close to the bottom. And we're long and strong on the S&P. I think these are both moving up to new all-time highs this coming week, probably, unless something ridiculous happens or weird. And I also think that we may see the government of the US of A, I've got to say that in a Borat voice, right? In the US of A, the government might come back to work this weekend. There are rumors that a deal may be struck even as early as tonight. I'm not optimistic about that, but if it is struck, we could see these rallies go even more gangbusters. There's over $1 trillion in the US current account waiting to be dispersed to people that have been working without pay. And well, there's a lot of them, $1 trillion worth of them. And that money is going to enter the economy as soon as the shutdown is ended. And there will just be a general sense of relief. We may get some numbers like jobs numbers and inflation numbers, which are not good or are scary. I don't know. I did see the Trueflation jobs inflation number come out, which is the first glimpse we've had. I'll read it to you if I can find it. The first glimpse we've had of any data, really. I might be able to flash this up for you, actually. So I'm going to go into Trueflation. Let's try and do this, see what we can get. Yeah, let me read through this. So this is actually super interesting. I'm going to switch screens here, which I don't often do. So let's go and get another screen. Let's have a look at the Trueflation screen. So we want to go to, what do we got? Slides. No, we got to stop that screen. Bear with me for 1 second. I don't know if I can do it now. I've lost my charts too. Sorry about this, folks. Oh, share screen. There we go. No panic. It's all good. All right, let's have a look at the Trueflation report. And this is it here. You can subscribe to this. It's free, actually. And just go to Trueflation. I think it's .com. Yeah, it's blog.trueflation.com. True spelt without an E. So it's TRU, no E, flation.com. Let's read through it. Now, this is, this number is always a little bit different to what we get from the official US numbers, but, and sometimes it's much, much higher, sometimes it's much lower. But at the moment, it's been fairly sort of in line with what we're getting from the US. And let me read through this. This release comes at a crucial time in US history when record-breaking government shutdown, it is now a record-breaking shutdown, prevents the release of the majority of macroeconomic data, including jobs, etc. And Trueflation puts it at 2.62%. I think that's a tick up from the last US jobs number. And so it's slightly worse than expected. I don't think we're going to get back down to 2% now or if ever. I think 2 to 3%, the high 2 to 3% level is about what we're going to get. So having said all of that, at least we've got a number and it's not that good. So it means that we might see further pressure on interest rates coming down as we go along. Now, I want to get my charts back up again. Let's stop that screen and give me 1 second, share screen, back to the charts. Now, let's get back into what we're talking about. All right, we're back here. All right, so we got long on the NASDAQ and the S&P on those dips. Once again, larger tranches here at the bottom, smaller tranches higher up. I also got long on the German 30. I think the German 30, this was a weird one, by the way. I got long on this at the bottom of the bearish candle on Thursday, thinking that it might be a weird sort of fluky candle and that it could just railroad track back up again. It didn't. It actually fell down on Friday, along with the NASDAQ and the S&P, but bounced back equally as vigorously. And now, as it turns out, we're in exactly at the same price that we closed at on Friday. So that one's looking okay too. I'm also long on a new name called CEG. You can go and check that out, energy company. I like this very much. I think we've bounced out of that support level. I think that's moving up quite nicely. Just giving you some ideas. I don't want to spend too much time on these. And I'm long on MSTR. Now, someone said, let's talk about Bitcoin and MSTR. I think I should talk about Bitcoin before we get to MSTR. So we will come back to that. But I'll just mention it briefly before we move on to Bitcoin and so on. MSTR has reached its lower 200-period Bollinger Band after breaking down through that triple bottom. This is a really important chart. It's a triple bottom down there, which we broke below, which is inherently very, very bearish, but we did not close below that triple bottom. Let me draw a line across the bottom of that for you to illustrate where we closed in comparison to that. I'll get to your questions as well now, Nomad and so on and so on. This session might end up being really, really long. I hope not. But I don't mind. I'm prepared to do it for you. I am a dutiful sort of person, and I will do my duty and provide you with everything you need. So there's the triple bottom. It's not quite a triple bottom, notably. It's a double bottom. Well, it is a triple bottom because there are 3 wicks touching that line to the tick at the 200-day moving average. Really important to notice that. We then had another attempt to get down to there, not quite getting there with a, well, it's a, I suppose, a piercing pattern. Not quite. Let's call it a bullish engulfing candle down there at about 260. And now let's fast forward to today. We've come back down to that breakout level, exceeded down to the downside, broke through the level, and let's zoom in. Remember, the black line is that previous triple bottom. So I'm not going to, you won't be able to see it now, but it's that black line that we're trading around. We did not close beneath there, and we closed this day with a very strong reversal candle, essentially a shaven bottom, shaven top, full-bodied reversal candle. A little bit of a wick on the top. I'm exaggerating, but a tiny wick. It's quite bullish. And of course, MSTR is only likely to go up, or is only likely to front run Bitcoin going up if Bitcoin is going to go up. So sometimes MSTR front runs the moves on Bitcoin. Look at this massive bounce on MSTR. And sometimes Bitcoin has to catch up. Other times, Bitcoin has to lead and MSTR will catch up. MSTR strategy being the Bitcoin treasury company based on their business strategy is based on owning as much Bitcoin as possible. And it's a lot already. So bouncing out of there, I'm happy with that. I like that reversal. Will this continue? I don't know. We're going to have to look at the Bitcoin chart, which we're going to do shortly. And just to mention, I'm long on Tesla, Coinbase, and NVIDIA. And I'm looking to add a lot more names in these coming weeks before the end of the year. My general view on the markets is that, and it may be not a popular view, or it might be 50-50, or it might be something that you vehemently disagree with or agree with. That's your choice. I'm not suggesting that you should do what I'm doing or have the same view as me, but it is my view that we're going to see a further melt up in stocks towards the end of the year. Everyone's calling for a crash, a recession. Everyone's saying that the big short is on again, and that these markets are all moving down, and we're going to see a 50% correction across the board, including Bitcoin. That might be the case. I don't think it's going to happen today, though, and I don't think it's going to happen this year, to be honest. I think it could happen very late this year or early next year, but probably more like late January or February, in my opinion. And that's based on fundamentals and technical analysis, not just one or the other. I want to move along then from that to the crypto charts, and I'm just going to say one thing here. I've started unhedging my first tranche. I'm going to talk about Bitcoin. I'm going to come back to all of your questions, I promise. I've started unhedging at $103, my first tranche of Bitcoin. I'm very heavily hedged at the moment. My hedges, I'm not going to give you the precise levels, but they're all the way up to about 107 and even 108, I think. And as we approach those hedge levels, I could take profit. They're all shorts. I've got a very large long position on at the same time. But as we moved down, as we broke down through support, I'm going to put lines on the chart now so that you can make more sense of it. As we move down, I'm going to show you this picture. We've got what looks like to me a bull flag with a pimple on the top. We talked about this in the Olive Prime live stream yesterday. Just going to move my heater out the way and grab a sip of Red Bull. We called it the pimple on the top of the bull flag, potential bull flag on Bitcoin. We've moved down to the bottom of the bull flag, but after having broken down this middle black line support, and I've got essentially three black line support levels in the center of your page. The one where my mouse is now, the one in the middle below that above the Bitcoin label, and the one just at the bottom of the Bitcoin label where the 200 period moving average is moving up through it. We broke down through the first line and we broke down through the second line and we got to the third line. So that was all pretty bearish, but we are at support. There's a support level there. It's also the channel or bull flag bottom, and it's also a Fibonacci retracement level. It's also the gap in the volume profile, the largest gap really, right here, after the volume drop off. The problem now is that we've got all the volume above us and we've got to get through it to get back up towards the top again. And that's going to be pretty tough. As we move up, I've got my hedges roughly $1,000 apart, spaced above us. Instead of taking profit on those hedges, which I could do now, and just leave my longs open, instead of doing that, I'm going to take them off one by one as we get to them at break even. I'm being more cautious because I'm not 100% convinced that Bitcoin is moving up. I think it is, and I'm pretty convinced, but not 100%. And so I'm going to unhedge gradually and err on the side of caution and unhedge later at break even rather than taking profit on those short hedges now. So that blob there in the middle of the screen is the confluence of a whole bunch of stuff: volume, the 200 period, the 20 period moving average, the channel center line just below that, a very large volume zone, and a repeated rejection zone. And it's going to be tough to get through there. All right, having said all of the sort of negative stuff, what is the positive here? Well, we've got a triple bottom. I'm going to focus on Bitcoin, but all the rest of it, and I've got a lot of coins on now. And I'm going to show you actually, just to show you that I am actually not as boring as you might think. And I do have quite a lot of, I'm going to try and scroll. I don't know if a lot of coins. They're all small amounts. And that's only about $12,000. And that's moving in and out. But I've got a lot of the meme coins and the various categories of coins, which may or may not work. That's a bit of a gamble. But this is serious stuff here. This is what I actually am aiming to store my, rather than property or gold or owning the S&P index, all of which are good and which I do to various degrees. I also want to hold Bitcoin. And it's a serious asset to me. It's not a gamble. It's not a seasonal altcoin, Bitcoin season thing. It's a serious asset. And as time goes on, I think more and more people get more serious about it. And of course, all the institutions and governments are busy doing that as we speak, trying to hoover up all your Bitcoin in the process. So this is all serious stuff to me. And I think that this triple bottom here indicates, first of all, a solid foundation. I love triple bottoms and double bottoms, but particularly triples. I want to go back to the gold chart. We're going to come to gold shortly. I'm long on gold, by the way, from 39.50. But I want to show you something that happened quite a long time ago, and you may remember it if you were trading gold along with me at this time. This is when gold, no, not there, down here. This is when gold got down to 1,630-ish. I was buying gold here. We had a triple bottom, and this had recently broken down through major support. If you were trading gold, I've got an itchy nose. Sorry, it's bothering me. I'm going to scratch it. If you were trading gold and you were hoping for the support to hold, including a further triple bottom, a previous triple bottom over here, let me put a black line there. You've got to remember how scary this was if you were trading it. And I was very vigorously, did very well out of it, actually. That was the bottom on gold, and it still is. Notice that double bottom followed by a perfect triple bottom prior to this. This is many, many months before, in fact, years before this dip down, breaking support and triple bottoming before rushing out. And look what happened to gold thereafter. That price was 1,630. And as you'll know, gold has 3x'd, not quite, almost. 4,500, did we 3x it? I think we got to 4.5. Let's just check. Yes, not quite, almost. We got to 4.3 something. So we almost 3x the price of gold from that level down there. I'm illustrating you from there. That's the level. Dip down through very, very major and key support after a run up, consolidation, triple bottom, and then off we go, and gold 3x's. Now, imagine if that happens with Bitcoin. Let's see if there are any similarities. I'm not saying it's going to do the same thing. It's just something that I noticed the other day, which I thought was super interesting. It's not even similar in shape, but it is a triple bottom. These are almost consecutive days, whereas in gold, it was several days in between. But a triple bottom, nevertheless. And look what happened. We broke down through major key support, like gold did back then, down to that 1630 level. And what did gold do? The very next few candles, it rushed up, broke through the resistance levels above it. Let's go back and have a look. It's very, very interesting. So let's go back to gold. What did gold do? It broke up through, let's go back there, broke up through that sort of range underneath the trend line or the horizontal. And then once it closed above there, it was off you go and never look back. Now let's go back to Bitcoin. We'll come to gold and all this stuff right now. I am cognizant of the fact we've only got half an hour left or so, unless we go on for 2 hours, which we could. We can do anything we want. It's my show. I can do it. I can go on for 3 hours if I want to. I don't think there'd be anyone here if we went on for 3 hours, but we could. Right, now let's go back to Bitcoin. So gold broke up through, remember, the consolidation zone below the major support. There's the major support, the third green line above us where the blob is, more or less. And we broke down through there. And what we need to see is the price close above that third, the highest black line here, the horizontal, and that should push it further on up. Yeah, so just an interesting parallel, and I kind of like it. Now, that's not the only positive thing. If you look at all these charts together on the same page, what do you notice when you put Bitcoin, Ethereum, XRP, Solana? Let's just look at the top 4 there. You can see all of them, and these are all day charts, I think. I hope, yes, they're all day charts. So each one of these candles is a single day, and they're all forming ascending triangles. Beautiful rising bottoms with a flat top. And there's only one that's broken out. Look at that beautiful one on Sol, beautiful rising ascending triangle. Here on XRP, beautiful ascending triangle. Same on Bitcoin. And XRP had the same, and it's now broken out of the top of that. I would like to buy some more Ethereum. Did I say XRP? I meant Ethereum. I'd like to buy some more Ethereum. If I zoom into this on a dip back down to that breakout level, we'd have to go into the 1 hour or 15-minute charts to time that. And the breakout level, I put the flat line on the top of that, and we're simply waiting for a dip. Let's just do it at the very top there. You can see that perfect double top, and I'm just waiting for a dip back down, maybe down to the moving averages down below us, the 20 and the 50. We could see a slightly deeper dip. Don't be scared off by that. It happens a lot. We get back down below the breakout level a little bit more, a little bit deeper than expected. There's the 20 and the 50. So we could get a slight bit down below there into that consolidation volume zone, and then bounce out of there. We'll meet up with the 20 and the 50 at the same time if that happens. So that's the sort of thing you could look for on Ethereum. I like the breakout. Now, all of these charts are forming ascending, short-term ascending triangles on the day charts. And I think that gives us an opportunity to get some breakout trades. Breakout, pullback, and off you go. So yeah, I'm long on all of these. Everything on this page I have long positions on, and I'm looking to grow the size of these positions as we go along. Right, I'm going to take a little pause now and scan through some of the questions in case I've missed out anything obvious, and get back to them, but I think we'll be okay. I'll scroll back to those. I would like to just finish off. Please indulge me so that I don't miss out anything that that I should be covering. So I want to talk about gold and my feeling on gold, and this is my sort of strategy and my plan. But if it doesn't work out, I will change. And the only way this can't work out right now, because I'm long, is if we don't move up and we move down instead, in which case I will consider hedging my position. I'll do that fairly quickly. I don't want to be holding a long gold bag here. And I know that gold at some point is very, very likely to pull back. I'm not saying it's going to get all the way back down to 3,500, but I have been saying that for about a month now, that's what I think is going to happen. And I haven't changed my mind. I see some other folks are saying now 3,500 is the new target. Last week, before that, or the week before, most people were saying 4.5, 5.5, 6.5. Now that we've consolidated and pulled back a bit, people are looking at this a little bit more with more leery eyes, I suppose. I don't think we're going to move down immediately. I think we've got to come back here, collect the liquidity that's been trapped up here by some large players. The violence of the sell-off was too quick for many traders to get out. Remember, large traders and players, whales, if you want, or hedge funds and or banks with very large bullion positions are not able to move them as quickly as we are as retail traders. It's not just a click of a button to move, 50 kilograms of gold or 50 troy ounces of gold or 100 or whatever, or 2,000. It's not that easy. And it's got to be done incrementally many of the times. And there are futures involved as well that are going to be traded. And it's like a whole process to get out and into trades when you're trading long volume, big volume. I've been involved in hedge funds and banks. I've worked for them. It's not as easy as you might think. So it is very likely, if not just possible, but also very likely that there's liquidity trapped up here and large volume liquidity. And I think we're going to have to they're not going to let it go. They're not going to just say, oh, well, that was a bad trade. It dropped too quickly. We couldn't get out and we got trapped at the top. Oh, well, it doesn't really work like that in that sort of size. And they'll be wanting to rescue some of those trades and get out of them, I imagine. That's what I would want to do. I would expect this to move up here to get out of my longs if I was trapped. And I'd be trying to manufacture that actually if I had the ability to do so. So I think it's more likely we'll move up into the blob. I'll be looking to reverse my longs. I've got a long position from there and there, bottom, and I think we added a little bit more on Friday. And I'll be looking to exit the longs in the blob. I don't know exactly where, but probably the 618 or the 786 fib, also allowing for a move up to the underside of the trend line in extremis. And even if we do move up to the underside of the trend line and at the same time exceed that previous all-time high, we're still underneath the trend line and technically slightly bearish. But I don't know if we're going to be able to do that. And I think the blob might constrict us and restrain us from moving higher. And I think after that blob has completed its work, we'll move down to about the $3,500 level. And that will be the place to load up the boat for gold again. So that's metals. I'm long looking to reverse in the blob. I have not got long on silver again, but if gold moves up and drags silver up for it, notice that silver, I might actually have a go at the short side on silver, depending on how we look later on, because this is below the curling down 20-period moving average and trend line number 2, and we haven't been able to regain it after 1, 2, 3, 4, a whole week. A whole week we've been under the trend line, and in fact for 2 weeks we've been under the 20-period moving average. Quite bearish. We are supported by the 50, the red one below us, and we got the other ones, and we got trend line number 3 coming up. So I'm going to be watching this very carefully, maybe to go short. I don't know. But if gold does move up, and I hope it will, it might not do, but if it does, it should drag silver up with it. I'm not trading platinum. I'm not going to comment on that today. It's boring. And then copper, we're short on copper now. I think this is a double top into that 618 golden pocket. There it is there. Let's get rid of these lines. They're a little confusing, I suppose. If I get rid of my drawings, it looks a lot better. So there's the double top into the 61.8% Fibonacci retracement level precisely. And we're moving down now, having broken down through the 20-period moving average. Target for this, I don't know, but I think we're going to have to get into a volume zone. And that's sort of negates the entire move down until we get down to about $4.60 or 70. That might be the target. I don't know what's going to happen thereafter. We might look to get long again, depending on Dr. Copper. Basically, when Dr. Copper goes up, it's a signal that we may be entering a better time in the industry and in the markets. If Dr. Copper moves down, and it's a good idea to keep an eye on this, because if you are long like I am on NASDAQ and the S&P and other things, and this starts moving down and shunting down, we're short on this copper now, but if it starts shunting down, it'll be good for our copper trade, but it might not be good for the other trades that we're in at the moment. Right, let's get to natural gas. It's kind of boring, actually. If you're expecting a super exciting analysis, there's not a lot to talk about because I'm fully hedged on natural gas, and we've fallen out of what looks like this channel. Now, let's just look at this very, very, very simply, right? I believe that natural gas is kind of bullish. I think we're moving up, or at least have entered a higher general region or level. in the $3 to $4 region. And if you remember, and if you've been trading with me for an awfully long time now, I think many of you will be, trading and watching my natural gas videos for over 4 years now. And you'll remember, we just could not get out of the $2 to $3 region. Month after month after month, we just languished down here. It's not uncommon for natural gas. I can't show you more on this chart. This is my Black Bull broker chart, but we've broken out of there, and I think that's similar to the dollar index, for example, moving into a slightly lower range. I think natural gas has moved into a slightly higher range. It's one of the reasons for it, because the dollar's moved down a little bit. But look how fast we've moved up into this channel. Now, this is a sort of like a periscope. It's very messy because you can't. Let's get rid of the lines. That's a good idea. So there we go, big move up. And, that sort of move on natural gas is generally unsustainable. Whenever you see it, we're approaching the highs of the range. Let's have a look. That was the big Ukraine. We had COVID, and then we had Ukraine, and all that. That was all this stuff going on, and then severe inflation in Europe and Britain, keeping those prices up. Eventually, we came down and overreacted down to the downside, and we're back into a more sensible range now. We've moved up rather quickly, and I think I don't know what's going to happen next. We could move straight up to $5, or we could move back down to, for example, this massive liquidity gap here created by the roll of it. Let's go back to the 4-hour chart. I'm going to leave the lines off. There's the rollover gap. So in a sense, it is a liquidity gap, but we've also got a nice swing low dipping into the gap there. Let's draw a horizontal there. Actually, I'm not going to do that. Yeah, let's do that. At the moment I put this on, my other lines will come back into view. So let's put that horizontal line on. And there we go. It's right at 375. Now, how did I know that? I didn't. So 375 is the area which I favor the most for this to come back down to. It's a very key level. Notice how we gapped up over 375. Let me just, well, let's leave it. That's the big red line in the center there. Look how on the contract, look how we gapped straight over it, forcing us to have to ignore the 375 level, thankfully. We then dipped back down to it where we got long at the 375 level. It's a natural support. Having broken over it, we've now come back down to it on the retrace. We got long on the retrace. Very, very simple. And we're quite a lot higher now. So that remains a key and major support. We've got the 50-day moving average here at 413. And we've got, we've got the 375 to 380 level all the way down here. And the 100-period moving average is there too. Now, my positions are these. Well, let's just take another second. We've got a sort of a channel forming. I don't know if it's a valid channel because we've only got one touch at the top, but we've got a trend line at the bottom, another itchy nose scratch, which we've tried to hold until the last few 4-hour candles on Friday, and we rolled down through it. I got long at the bottom of, I'm trying to get a trade here, but you can see we've been really since Monday last week. We moved across the page in almost no range, a very tiny range. Look at the daily candles, very, very tiny little daily candles over here. Thursday was quite big, but otherwise quite small. Back to the 4-hour chart, and we've fallen through the channel. We didn't get to the channel top again. We didn't even get to the channel center. That's where I wanted to sell. We didn't get there. And so we did sell there, and then I reversed and got long because we bounced off the channel bottom and the 20-period moving average. That's this green line. And then we've just fell over again and started moving down, didn't get any momentum. I had to hedge this, not because it was moving down only, but because it was Friday afternoon, and I don't like to hold natural gas in an iffy position over the weekend. If I had a decent position and it all, it was all quite safe and it looked good, I would probably hold it. But I just didn't want to hold an iffy position at the weekend. So I hedged the whole lot. It's not a big trade anyway. So I'm long from, I don't know, like 430 and short from 437. So, and it's only like I think a 15% position. So almost no size and almost no gap between the hedges, which means essentially I'm flat in all manner of speaking. So what are we going to do when this market opens up? I have no clue, but we are probably going to gap. Looking at the weather reports, it could be that we gap a little higher, but I don't know. This is just sort of a thumb suck at the moment. And if we gap higher and manage to move up above that hedge level, I'll consider unhedging and allowing this to run up. I might just leave the hedge on and see what happens when you get to the channel center line. and adjust my position in the right direction when we get there. But in all likelihood, if we gap up, I will try and get long as soon as possible. And if we gap down, I'll try and get, seeing as I'm hedged, it doesn't matter, but there's no risk involved. But if we gap down, I'll consider that we're probably going down to $3.75, and I might even try and get short. I don't know. Depends a lot on the candle shapes, on the veracity of the moves, on the timing of the moves, what's happening on the 5, 15, half and 30-minute, 1-hour charts, and what's happening in the bigger picture. So I don't know. I have no clue. I do know, though, however, we're falling out of this channel. We didn't get to the center line, and we have the $375 target beneath us, which may need to be retested, and we could get a double dip out of there. That's this level down here, the low above the NATGAS label or sign. So let's kind of draw that. We could get something like this. I don't know. I'm just telling you, I'm prepared for that sort of thing to happen. I'll get short and then I'll get long. And if that doesn't happen and we just move up from here, I'll try and get long immediately for the top of the channel and around about $5 to $5.20, maybe the channel center line only, which would take us up to the top of the yellow zone at about $4.75, $4.80. So that's another alternative. We could do something like this as well. I don't know. But set your plans. As I said on the video at Ola Prime on Friday morning, what are you going to do? I asked exactly the same question. What are you going to do if this is what natural gas does following the open tonight? What are you going to do? What's your plan? What's your strategy? Or what are you going to do if natural gas does something like this and moves up to the top of the channel? Or what if it just gets to the channel center line and then collapses through the bottom? These are all options, very obvious possibilities that you can examine yourself and plan for. And if you've got plan A, B, C, and D, and they cover all of the possibilities that might occur, or most of them, and you've got all your plans in place, and the path eventually follows A, B, C, or D, or starts off into one of them, and you get going on that path and it works out, then you're prepared and you planned already in advance. So if you'd like to know how I'm trading natural gas in a few hours' time, sign up right now for my private group, and I'll tell you at the time that I take the trade, my position, my direction, trade size, my profit target, my exit strategy, my risk protection strategy. I'll tell you it all. All you've got to do is click the button and join and sign up at the private group. And it may well be that if you do that, you'll make yourself the subscription tonight. You never know, depending on how natural gas goes for you and how you choose to play it. So come and join us. We make good money. We trade really well. We've got a fantastic group. And you can ask, I think, without exception, anyone in the private group, whether it's value for money and whether they're actually making profit from their trading or not. And I think, and I stand to be corrected, but I think you'll find almost without exception, the answers are yes, I'm making money, and yes, it's very, very worth being part of the private group. So that's my grandpa-like advice for you. So that's natural gas. I will tell my private group members the trade I'll be taking when the market opens later on. If you want to know what that trade is, sign up. That's it. What else can I say? Now, here's WTI oil. And unlike natural gas, well, I suppose a little bit like it in a sense, I've also I've hedged this position. I don't know which way this is going to go. Let me just check. I just want to make sure that I'm not talking nonsense here. I actually think I did get long. Yeah, we got long at 59.80. Here we go. This is a change in direction. I'm only long for the third time. Sorry, I was confused with something else. I know I'm long on WTI. It's only the third time in the last 3 years, I think, that I've been long. Let's have a look. Now, we've been short all along. We got long right at the bottom here. We got short at the top there. This is just a move from support, really. Got long on that triple bottom, moved up into the 50-day moving average where I got out. Simple as that. And then I got short at the 50-day moving average because my direction on WTI overall, my feeling, my strategy is to trade this short as much as possible. And so after having got long for the, I don't know, maybe the third time or second time in the last number of years, we got short again because that's the direction which I favor. But we got down to the bottom of the channel, which is now forming what looks like a bull flag, and bounced off it, and actually on this occasion didn't reach it. We got down to the 20-period moving average and rejected the 20-period moving average and the channel center line. This now looks like a bullish flag. And if we take the approach, the flag pole, the approach to the flag, duplicate it, stick it onto there, that gives us a target all the way back up here at $65 and some change at this previous high where the WTI sign is. So I'm now long for I think it is the third time, or it could be the fourth in the last 2 or 3 years. I'll be exiting there if we get there at 65.5, maybe 65. If it keeps going higher and it's got some momentum and vigor, maybe a little bit higher, I don't know. And then immediately I've done that, I'll be looking for that 4-hour reversal setup or pattern or candle, looking to immediately reverse and get short on WTI at about 65 or wherever it turns for a move back down to this low at around 55, at a little bit higher than 55. And then I think we can get much lower down towards the bottom of this long-term channel, after which I think we'll bounce back to where we are currently trading. So let's have a look at where the bottom of that channel is. I'll go to the weekly chart just to show you, to give you a sort of broader perspective on this. I know it's messy. I do ask for your forgiveness, but I think you can see the channel. And because this goes over a number of years, it is messy, but those are all my short positions. Those are my long positions. I'm long currently, but eventually we'll be getting short again for a move back down towards the bottom of the channel. At some point, we will break out of this sloping down channel. Sloping down channels normally break to the top, not to the bottom. And so we should see this break out maybe sometime next year. I don't know exactly when. Let's go back to the day chart. We've got 15 minutes left, folks. So if you haven't got your questions in, I suggest you do it ASAP, and because there won't be much time. I'm coming to an end soon on my monologue, just to cover sugar, coffee, cocoa, soybeans, etc. I'll tell you my positions on it. I'm long on sugar still. That's droopy, but I don't know. I have not added more size on here yet, but I will do as soon as we get some movement up through the channel. I think my positions are slightly higher at around 15.5 to 16. We're currently trading at 13.5, so quite a long way down. But these are not big positions, and I'll start adding size on as soon as we see some movement. Got nothing on cocoa. I did think that cocoa could move slightly higher. It has not done so. We're still above the channel center line on cocoa. I think we could get higher up to about 7, 8, maybe. I don't know. Let's see what happens here. If we don't bounce out of this channel center line and close below it, there's a gap below there too. Look at that. So we might have we closed that gap? We've closed that gap already. So maybe that's it. Maybe we're going to bounce out of here and move up to the top of the channel and then move down. Generally, I think cocoa's bearish, and I think we're going a long way down towards my question mark down there. But I've got no position on this just yet. We've been short all along until now, but I am still short on coffee, and not a dissimilar picture actually. And I think coffee will eventually do something like this: freeze it, pause it, do whatever you want. We've been short on and off. We took all the shorts here. We got out at the bottom, starting to sell it, getting tongue-tied. Took all the shorts off at the bottom, those 3 red shorts on the left-hand side, and we're short again now. Just started getting short again now. And I will try and take those off at around about 280. Look for a bounce back up to about 350, and then back down. Look at all these order, excuse me, these volume humps or zones on the right-hand side. You can sort of use that to judge the rough targets if you want to. Soybeans, I was long. I'm out of that now. You can see my entry and exit on soya. Entry there, exit there, the gray arrow. That trade's done for. If we get back to the green arrow, I might reconsider a new long on that. I've also moved a lot of my assets or funds or money, basically, out of some of these softs and grains, or either reduced size or taken profit like I did on soya. And I've allocated some of that funding or capital into crypto and stocks. I'm going more into the crypto and stocks, those sorts of assets towards the end of the year. If we see those rallying up. I don't know if we're going to. I'm really hoping that we will. I think we've got a good chance of that. So corn, many of you are trading corn. I'm long on corn as well. What happened there? Private notes, corn. I'll just zoom into that quite quickly. Allow for a dip down to the purple. Let's quickly zoom in. Allow for another little dip down to there, but I think we should get going from here. But I'm allowing for another dip. I took a new long position from there, got one from down there, looking good. And then wheat, I've taken profit on wheat too, and I'm allocating this capital across to stocks and Bitcoin. But wheat, we got long at the triple bottom and out over there at the gray arrow a few days ago. So we're out of wheat now, but we may have another go at this actually. And it's dipped back a lot. I didn't expect it to fall off so much. So we're coming back into a good buying zone and maybe back down to the breakout zone on this trend line, and we can get a sort of a breakout pullback type trade on this, and it might be worth getting along again. So something like that. There's a little gap there on the trend line, so just down to that gap or the trend line, and then out of there might be quite good on wheat. That's one option for you to trade. Wheat overall, I do like this pattern. Let me just quickly zoom in, show you another falling, descending, falling wedge pattern. I thought we'd get a little lower. We didn't, and break out eventually. We broke out early and not as low, so a bit premature, which is quite good for the bulls, really. A premature breakout that didn't get quite as low is that's what bulls like, isn't it? Premature breakout. That didn't get that low. All right. So that's softs and grains. We'll come back to that if there are any questions, and then a couple of other things. I'm long on the VIX. No trades on the VIX. Looking for this to squiggle down into the green area. We'll come back to these if there are any questions. The Bitcoin gold chart is interesting because we did kind of hold the level, and I didn't think we were going to. And if we want Bitcoin really to get going, we've got to hold this level here, the Bitcoin gold. Look how beautifully that bounced out. I need to look at this on a short-term time frame because it's going to look so nice, so beautiful. There's the triple bottom that I thought would hold. We did try and hold it. We then broke down very briefly, just for 3 or 4 hours, before smashing our way back up through that level. Bitcoin gold, very bullish on the short-term charts. Go to the 4-hour chart, we'll see some good candles there too. Beautiful, absolutely beautiful. Not as big as these ones on the left, though. We want to see, some real impulse moves. This is I would call this just a start. Of course, you can't see the current price on here because gold is not active at the moment because the markets are closed. And then on the day chart, you can see, yeah, it looks okay. I kind of like it. That is a proper piercing pattern reversal candle on the day chart. A piercing pattern makes a new low compared to the previous day's bearish candle, makes a new low, and then closes and completes the next candle, this day's candle, more than halfway up the body, not the wicks, the body of the previous bearish candle. We did both. We made a new low, and we closed more than halfway up the previous bearish candle. Very good for Bitcoin gold, and that should be good for Bitcoin US dollar. Also, for those of you who are altcoin traders and following Bitcoin dominance, that's moving down nicely, now below the 20-period moving average, but still held up by the 50 and the 100. And then finally, this is one trade that I kind of like a lot. And I said to someone on the Ola Prime stream the other day, sometimes trading the things that are just plain ugly, and I think I said in my private group as well, just plain ugly and dirty, like the ZAR, like oil, and a couple of other dirty type plays. What I mean by dirty is just messy, unpleasant, and generally quite annoying most of the time. Oil's a bit like that, but this is the ZAR, and I think that this is a great trade. I think this is going to work out. This is probably going to be one of the most profitable trades going into the next few months or next year, and that's buying this. We've got a triple bottom here. There's a lot to talk about on this in terms of politics and economics and the charts. We don't have time to do it right now. I'd really like to get into it in some depth, but I can't. But just to suffice to say, we've got a triple bottom, a double bottom within a double bottom here. And everything lines up with this finding some support here and moving up into new all-time highs, in my opinion. And so we've got long on this one, on the dip down, on the rally out of the double smiley face, double bottom above a double bottom, rally out of there above the 20 and the 200, 20 and the 50 period moving averages, rejected by the 100, back down to the 20 and the 50. And that's where I bought on the breakout of the 20 and the 50 pullback. And I'm hoping that this will hold. I think it will. I think that's a good play. Target for this is back to 20. We're currently trading at 17. So that's, that'll be a good move, 15% move up, but I think we can get much higher than that too. So that's everything on that page. And I think that's really it. And what I want to do now, I'm sure there's a whole bunch of stuff I've missed out, and I've been speaking literally nonstop for an hour. It's a good idea for me just to, be quiet for a wee bit, go back to the top, read some of the questions and see what we can get. MD, I hope I answered all your questions on Bitcoin and MSTR. If I didn't, please just make a note. You've got a few more minutes, 7 minutes before I finish off. So just let me know if there are any specific questions that you didn't get answers to. Hi, Emily. Nice to see you. JB Auto, I've said hello to you already. Nice to see you. I'll buy your BF special. Will there be a link to it? Yeah, there is a Black Friday special, Davis. There will be emails sent out, And I think there's a very, very big discount, actually. And Emily Trading, who's in the chat here, I think, yes, she is. She's just said hello. Emily Trading will be sending emails out to everyone that's subscribed to this channel and to my private group and anyone else on our mailing list. You will receive all the offers for Black Friday, Cyber Monday, Black Week, whatever it's called, all of those offers. Emily will be doing that in the coming days. So watch out for your inbox. But you must be subscribed to this channel to get those offers. You don't have to be, actually, but just to make sure you don't miss them, really. JB, okay, so let's carry on. So Black Friday special, yeah. So make sure that you're just subscribed to the channel and keep your ear to the ground. Those will be coming out this coming week. So yeah, for sure. There's some awesome offers. Edgar Antonio Merrill Manchera, you say gap down at the open. I think so too. I think so, Edgar. But we'll see. You know, sometimes we just don't get what we think we'll get, and it's completely the opposite. Hello, Mr. Awesome, says Blah Burke. Nice to see you, Blah. And of course, I'm going to say hello to you very nicely because you called me Mr. Awesome. Mr. Wonderful was on TV this morning talking about New York City and politics, of course, and money. So there's a whole bunch of new discussion opened up by Mr. Wonderful. And apparently I'm Mr. Awesome. So thank you so much. Good day, Andres. Nice to see you, mate. Emily Trading Davis. Thank you, Emily. Appreciate it. Yes, Emily's already replied to you. Fantastic. She's on the ball. Ashan, look at Cocoa. Ashan, yeah, we did look at Cocoa. I think that's kind of covered most of it, really. I'm just going to quickly go back to Cocoa just to see where I may have not covered everything. Yeah, so I was hoping for this to move up. We did talk about this in some detail, actually. If we don't manage to get a move up to the top of the channel line here on Cocoa, and it's starting to be quite a nice channel. We've only got one test at the bottom and 3 at the top now. So the top trend line is kind of pretty well determined or defined, but the bottom one is not. We don't know if there's a bottom trend line here or not. I've just drawn it as a channel to make it make more sense. Now, if it is a channel, we're still above the channel center line and we're not moving down. And so there's a chance we might bounce out of it. But if we don't, you might just want to sell, you might want to sell the break. If we break down through the channel center line and that little gap down below there, we've already filled that actually. So that's a good sign. We didn't reject from the top of the gap, and we may reject from the bottom of the gap, of course. But if we move and close below, I would wait for a daily or 4-hourly close below, let's say 6,000, basically. A close below 6,000 on a 4-hour or a daily basis might give you a chance to get short there, or wait for that rally back up to the top of the trend line or the channel line on Cocoa. I hope that's helpful. That was Cocoa. All right. Let's have a look. Good day, Martin. Always nice to see you, of course. Nomad from Canada. I want to thank you for guiding us through these very, very difficult times, Nomad. I appreciate your thanking me for that. My job, I'm really, look, it's for me, I do this because I've got a bit of an ego. Sure, I like to be on camera. Anyone that's on camera is only there because they've got a bit of an ego. Don't believe anyone that says they've got no ego if they're on camera. Of course they do. But I also take my job quite seriously, like really seriously. And my job is to make sure as much as possible that I can help traders avoid the pitfalls and the risks and to try and maximize their profits. And we are trading in very difficult times, really, really difficult. And of course, we've got the US coming up, the US potential government opening coming up, loads of backfilled data to come in, which is going to be chaos, and markets which are whipsawing like crazy. We saw the NASDAQ drop like 2% and close back up, near the highs again. So really difficult. But come and join us in the trading group. I think you are already. So although sometimes I can't match the names here with the names in the private group. Good day, Boring Channel. Always good to see you. And I won't play that horrible song that you don't like. Don't worry about it. Keith, nice to see you. Sean, nice to see you. I see you every day, Sean. It's great. Nomad, can you tell us your crypto position and update us on your strategy? I know it's a challenge. Yes. Okay. Yes. All right. Now I know who you are, Nomad. Thank you for that question. Yeah. So let me explain to you. I can't do this in detail, Nomad, because not everyone here in the YouTube is part of the private group, but I will try and explain it to you in sort of general terms. Now, I started hedging, and you'll remember this in the private group, I started hedging when we broke down through around about 100, just below 108, down through this black line. And I started hedging every $1,000 below there. I took a short, keeping my long position open. I do realize you haven't been part of the private group for a long time, and so you haven't followed this trade as it's developed. I got long in the sort of mid 70s initially, and I've added to that and hedged it variously as we've gone along. But my average position, long position, is now around about $79,000 to $80,000. 70, I think it's actually 78.5. And that position is untouched. I'm not going to be undoing that position, selling those longs, anything like that. Those longs are there and they will remain in place for as long as I want them. I think until we get to what I think might be the cycle. And I'm not even a cycle trader, so I don't know why I'm saying this, but I'm going to say it anyway because it's just what everyone says. When we get to the cycle swing high, wherever that might be at year end or early next year, I might then decide to move my crypto around a bit. And normally what that would mean was to take the money out of my trading account and or my soft exchange account or crypto brokerage, Kraken, and move it into cold storage. That's kind of what I do. So I'm not really ever selling my Bitcoin. Every bit of Bitcoin that I buy, I generally keep, and eventually it moves into a safe, a cold storage. That's what cold storage is. So that's the plan. Now, as we moved up, as we moved down below 108,000 into the 107, 106, 105, 104, 103, 102, and we did get down to all the way down to 98, essentially hedging as we went down. And I'm now undoing those hedges as we move up. I'm not taking profit on them. I'm not closing my long positions, but I'm closing my short positions at break even as we move up through them. And so when we get to 104, I'll take off another position. 105, I'll take off another position. 106, 107, and there's one at about 107, 800 or something like that. And then at that point, I'll be completely unhedged and I'll be holding my long positions from lower down as if I had never done any hedging at all. The other way you can do it is by taking profit on their short. This is a much more risky way of doing it. If you got a hedge, let's say at the green blob here, which is where I started hedging roughly, slightly below that, and we moved down from, let's say, 108 down to 98, that's a $10,000 drop. Your hedge is a short position, which means that short position is in profit by the time you get down to 98,000. One way you could do it is to take profit on those shorts and just take profit on them and wait for the market to move back up and keep your long positions and hope that the market will move up. You'll be then holding long positions in significant drawdown, but you'll have offset that drawdown with the profits you took on the shorts. So, there are different ways of playing the unhedging process. In this case, because I'm not 100% convinced that Bitcoin is going to hold here, in the next days and weeks, it might rally up a little bit and then come back down again. I don't know. I don't know what's going to happen next. I'm not fully convinced yet until we close at much higher levels. And so I'm not going to close my hedges for profit. I'm going to let the market come back to those hedge levels and take me out of break even. It's not fully break even because, of course, there's a cost every night that you hold these positions open. And every night that I'm holding a long and a short from, say, $103, 103,000, I've got longs on and I've got a short from that at the same time. Those are all incurring overnight rollover costs, which the broker charges you according to their policies. I hope that's been helpful. So generally, essentially, Nomad, by the time I get back to about just under 108,000, I will be fully unhedged, having taken my hedges off at break even as we rally back up through those levels. And that's the least risky way of doing it. It's also the least profitable because I could be taking significant profit, massive profits actually, on those short hedges down at the bottom. If I knew this was going to bounce up, that's what I would do, but I don't. And so these markets could carry on moving down. And if I've unhedged, I'm placing myself, I'm unprotected, in peril, in danger, and I'll be holding a lot of positions against my desire. They'll be negative. Folks, so that's that. I hope that's answered. Please ask me in the private group again. Now that you've got a sort of a general idea of what I'm talking about, Nomad, ask me again when I come back to the private group after this session. We'll talk about it in more detail, and I'll try and help you out. Omkar, nice to see you. How useful is it to know the concepts of Elliott wave theory? Look, it's a good idea to know basically the basics of Elliott wave theory, Omkar. I've studied Elliott waves. I've got all the books. I did all 20 years ago. And I've largely just, it's just general knowledge for me. And I look for the various Elliott waves in general, 3 waves, 5 waves, impulse wave, corrective wave, and different things, extensions and all that sort of thing. But I don't trade using that system. I observe it. I see, oh, that looks interesting. There's, that looks like 5, 1, 2, 3, 4, 5, and then an ABC. Yeah, it looks like it. And that might confirm the position that, or the ideas that I have in mind from other technical analysis. But I'm not an Elliott wave person per se, or trader. Right, I think we're coming to an end. James, nice to see you, mate. Long in ZAR, yes, good one. Crude oil, good one. Gold, excellent, good work. That's exactly the same as me. Sign up, it's well worth it, says Nomad. I've been a member of other groups, and James has the best approach and strategy. Of course, we all know that. What about gold? We've talked about gold in extensia. Have we? Have we talked about gold? Yeah, maybe we haven't, actually. Let's go back there. Oh, yeah, we did talk about gold. I told you I'm long on gold, looking to reverse in the blob and get short back down to 3,500. When we get to 3,500, I'll reverse and get long again to go back to where we are currently trading. Pretty simple. So short, long, short. Well, I think we're going long now. Long, short, long, basically. That's gold. Gareth, how are you, mate? Sorry, we spoke by email the other day, yesterday, and this is a very good question. I did ask you to repeat this in here, so maybe I'll take a few minutes. But once again, let's try and talk about it in the private group. But I did ask you to bring it up here, so let's do it. Hi, James. How do I only risk 2% of my account on the longer time frames using Black Bull markets and TradingView? Seem to only get it right on the 15-minute chart. Okay. So Gareth, really, so I get it. It depends on your account size, essentially. If you've got, let me try and simplify it. Let's say you have $100,000 account, and 2% of that is $2,000. And if that's what you've decided, 2% is your risk tolerance. I think it's a bit high, actually, but anyway, I prefer 1%. But let's say it's 2%. So 2% is $2,000, and that's what it means. Of your $100,000 account, you can risk $2,000, and therefore it comes down to sizing. If you know that your stop loss or your hedge level or your target, whatever, the way this trade is structured, if you're looking for 5 or 10 pips on a 3-minute chart, and you're day trading, you're looking for 5 or 10 pips. It's easy, right? You can leverage up, you can do whatever you want. You can, if you're only risking 5 or 10 pips, you can put as much as you want on, and only risk 2%. You could leverage by 5 times maybe. But if you're looking for, on the euro, for example, if you're looking for 500 pips, and in order to do that, you've got to risk 200. In other words, let's go. This is not the way I trade, by the way, but I'm trying to use generic examples. So you're risking 200 to gain 500 on a swing trade. It's a much longer trade, and so we're not trading. We're not risking 5 or 10 pips. We're risking 200 pips. And I think your question is, how do you deal with sizing when you only want to risk 2% of your account, but you want to make some profit? The short answer is you cannot swing trade with very large position sizes if you only want to risk 1 or 2% of your account. You can't do it. And that's why we're aiming for much bigger targets when we're swing trading. And instead of aiming for 5 or 10 pips, I'm aiming for 500 pips. But in order to do that, I've got to risk 200 pips, for example. And therefore, my position size has to be much, much smaller, maybe 10 times smaller, maybe 50 times smaller. But you're aiming for 100 times more profit in terms of pips, but you're also risking 20 times more in terms of your stop loss or your hedge. So it's all about how much money you've got and how much of that you're prepared to risk in terms of percentage, and how much you're aiming for and have to risk per trade. They all go into the same calculation. And the bottom line is, unless you have a very large swing trading account, you're going to have to size your positions pretty small. And there are loads of folks in the private group that'll help you out. Please feel free in my private group and ask people. There are lots of very clever traders and they'll help you out with that. But that's the kind of thing I wish we had more time, Gareth, because we don't run out of time now. But please chat with me, and I know that it's possible that we could actually meet up and talk about some of these things too, on account of geography. So maybe we can do that. Okay, let's talk about NVIDIA. I'm going to finish off with this, I think. There are lots more questions. How to transition, folks? You're going to have to ask me. I will be doing more videos during the week, by the way. And before you go, let me just remind you that Paul Pico, our crypto expert, it's crypto season, folks. Do not miss out. Paul is an expert on crypto trading, not just Bitcoin, altcoins, the whole bank shoot, and he's posting up some fantastic winning trades already. You must be part of the private group or join this YouTube channel. There's a membership option below as well. It's only $1 or $2 a month. Or subscribe to this YouTube channel. Make sure you don't miss any videos, but make sure you get involved. This is the time that we're making money. This is when we're all in. This is when we don't get a lot of sleep sometimes. This is when we're making lots of trades, looking at all sorts of awesome stuff. And it's that time of the year. And if you're not involved in it, if you're not a trader, if you're a trader and you want to make money, if you're a trader, the reason you're a trader is because you want to make money. So learn how to do it properly. Don't mess around. Don't waste your money. Don't blow your money on your own trading when you really don't know quite what you're doing, and you over risk, over leverage, take the wrong trades, get the wrong direction, get panicky, get FOMO, get FUD. If you want to avoid all of that morass of misery, just come and join our private group. It's going to cost you almost nothing, and it'll save you an enormous amount of pain, misery, and probably money too. So having said all that, Paul is amazing. You're quite right. He's one of the best crypto traders around, and you need to come and join the private group. That's one. Now, we were going to talk about, there was a question, NVIDIA. Let's have a look at NVIDIA. Now, there's a little bit of consternation about NVIDIA. I'm going to finish off with this for sure, because we're running well into time now. There's a little bit of consternation about NVIDIA. Let's have a look at the chart before I talk about it. Let's go across there right now. I'm long on NVIDIA, and we've been long for some time. There's the breakout triangle. I think we'll get back down there eventually. That's a big flat top breakout, and we're trading well above it. We haven't revisited yet. We've got to come back down at some point, I think. Maybe not. We're holding all of the moving averages except for the 20. That's the green one above us. We're holding the 50, the 100, and the 200, the important ones. We're also holding this breakout level somewhat, even though we dipped down below it on Friday with that big sell-off, sharp reversal, back above the 50, stuck below the 20, but above the reversal level. I'm long on NVIDIA, as you can see my positions, one from there, one from there. And I'm pretty optimistic about it. I think it's got a bright future still. I know it's overvalued. I know it's overhyped. I know there's too much going on in all of this space, but I think we've got one last spurt left in it. There is some consternation about NVIDIA and all these chip names and the companies that are involved, all the data centers. Meta is involved with a $24 billion deal with NVIDIA. And there's this thought or proposal that it's all one big Ponzi roundabout scheme. They're just sending the money between the houses. Maybe, I don't know. But I do know that NVIDIA chips are well sought after and exceptionally good. And there's no shortage of demand. So I remain bullish on NVIDIA for now until some weird bad news comes out. Same thing with MSTR coin, Tesla. Tesla's great, by the way. There's so many naysayers. We've been long, every time we get a dip on Tesla, I buy it and, we make money. So far, so good. We're holding up here pretty well. A lot of a big gap here below us, though. This will need to be filled, and maybe it's not too far from now. We may need to get hedged, but I think we can fill these gaps. We should see a big bounce. There's the 200. There's the breakout triangle. We haven't retested it yet. Maybe Tesla has to come back down. Maybe the whole market's got to come back down. But I think what we saw on Friday was not an indication that we're going to see that, but rather, if you look at the NASDAQ and the S&P and all the rest of them, the green arrow to the left-hand side there looks more likely, and that Tesla is going to just keep on going up. Let's draw that line there and shrink this chart down and get an idea of where that bull flag breakout could take us. There's the ramp into the, not a bull flag, it's a triangle, right? So if we take the ramp into the triangle and then the ramp out of the triangle, target is a top 200 period Bollinger Band for Tesla at $500. We're currently trading at 430. So we've got another, another 12, 15% to go up on that as well. So folks, that's what I think. And whatever I say is just what I think. Okay, that's all it is. It doesn't mean it's going to happen. Doesn't mean it's true. Doesn't mean it's very well thought out. It doesn't mean that I know anything about this subject at all. It's just what I think. You have to decide all of those things for yourself, whether I know what I'm talking about, whether you agree with me, whether you can work within those structures technically, whether you think that there's a trade on for you or not. All your choice, not mine. All right. Now, having said all of that, I think we're going to end up and finish off, and just too much chat, too many people, too much fun. It's Sunday night, folks. Go and spend some time with your family. For those in the private group, I will see you in 4 hours' time for our first trades of the week. If you want to take the first trades of the week with us, come and join us at the private group. Links below. Speak to you soon. Take care, everyone. And yeah, it's going to be a good week. I'm not going to be at Olive Prime anymore from next weekend onwards. I'm fully back at ArcisFX here with you guys. So I'm super excited about that too. And together, me and Paul will be providing you with all the best information you can possibly find on crypto and trading. I think this is the best place to be. Take care, everyone. Speak to you soon.